Have you ever thought to yourself, what is mutual funds? What is mutualing? How does it work? I've got you. Hi, my name is Oluwatosin Olasende, and I'm here to tell you about everything you need to know about mutual funds. So, what is a mutual fund? A mutual fund pools money from many investors and invests it in a diversified portfolio of stocks, bonds, or securities managed by a professional fund manager. The key feature here is management. It comes with management fees and it is being managed. I love to liken mutual fund to rice. So stay with me. If I put rice into tomato sauce, what does it become? It becomes jollof rice. If I put rice into fried vegetables, it becomes fried rice. If I put rice into palm oil and dried fish, it becomes native rice. The purpose of this illustration is to show you that what determines the kind of rice I'm going to make is what I dip it into. And the same thing works with mutual funds. What determines the kind of mutual fund it is what the fund manager invests the funds in. The securities it invests the funds in determines what kind of fund it is. So you invest, let's say, 10,000 naira, $100 or £100. You're pooled with thousands of other investors. The fund manager invests this in assets, and then you get a return or a loss proportional to your units. Now, how do we know what kind of funds that there are? We have different types of fund. The very popular one that everyone talks about is the money market mutual fund. Remember the analogy I made with rice and about what you dip the rice into and how this then dictates what kind of fund it is. That is what is happening here. For money market mutual fund, it invests in short-term securities, things like treasury bills, government bonds. It is lower risk and it is great for emergencies. The returns on average in the Nigerian market is circa 12 to 18%. So you can put your emergency funds here. You can save for your school fees here. You can save for your rent here. It is low risk in nature. If you would like to invest in mutual funds or even in treasury bills, you can come onto Ladder, download our app, click on invest in treasury bills, and you get that because the money market mutual funds is short-term, low-risk assets. Number two, bond or fixed income funds. This is you investing in government and corporate bonds. It is moderate risk and it has steady income. The returns is from 10 to 15% per annum typically. Number three, equity or stock funds, meaning that you're investing in shares of company. That's higher risk but also higher potential return. Let me make you laugh. A few years ago, somebody called me and said, Tosin, I invested in mutual fund and my fund is a negative. I lost some money. She couldn't believe it. And I said, can you reach out to your fund managers and ask them what kind of fund you're invested in? Then she got back to me and said, oh my gosh, Tosin, you're right. They were investing it in the stock market. And that is why. So many people think mutual funds is like money market mutual fund, which is the low risk one that you would not lose money and it's stable and the risk is low. But there are other funds that are mutual funds. So remember what I said about what you dip your rice into determines what kind of fund it is, and that is how the equity fund is. So if you put it in the stock market, you can make so much money in the stock market. You could also lose some. It comes with some risk, but you know what they say? Higher risk, higher return. So that's the equity or stock fund. Then you have the balance or the mixed fund. This is a mix of equity, bonds, and cash. We love this so much. It's a nice middle ground for risk and return. It is good for medium-term goals. Then you also have the index fund that is it tracks a market index. It is low cost and passively managed. It consistently outperforms most active managers. So let's talk about some mutual funds in Nigeria. You have the Stanbic IBTC Money Market Fund. It gives you circa 18% per annum. There's the ARM Discovery Fund. There's the United Capital Fund. There's so many other funds out there. But remember, if you want to get into low-risk funds, you can download Ladder's app where the founders and you start saving and investing as little as 5,000 or 10,000 naira to get started. Mutual funds in the US, you have the Vanguard 500 VFIAX. You have the Fidelity Zero Large Cap. You have the American Funds Growth, and you also have the Vanguard Total Bond Fund. And the mutual funds in the UK, you have this list here that is the Vanguard Life Strategy, the Fundsmith Equity Fund, and more. And it also shows you their average return per annum. What are the pros? It's professionally managed. The expert pick your investment. Diversification is spread across many assets. It has a low minimum entry and it is liquid. That is, you can redeem your units relatively quickly. and it is regulated. It is regulated. What are the cons? The management fee. It eats into your return. 0.5% to 2.5% adds up very quickly. So, because of this management fee, we usually love to recommend ETFs that is passively managed and has a lower fee. Also, you don't control individual stock picks. The active funds often underperform index funds long term. Capital gains tax is applicable on the redemption, and the returns are not guaranteed. That is, the principal can drop. So, how do I start investing in mutual funds? You have to define your goal. Is this an emergency fund? Is this for retirement? Is it for my child's education? Your goal determines the kind of fund you will put it in. You also get to choose your platform. Remember, you can download Ladders app, click on Treasury bills. It gives you similar return for a low risk mutual fund, that is your money market. You complete your KYC, start small, increase the amount monthly, reinvest your returns. And that is all you need to know about mutual funds. If you have any questions, please come into the comment section and ask us. We'll be able to answer you immediately. Do not forget to subscribe and share this with other people. Let's all start investing together to build the future we want to see. Thank you.